motivation. We hunt and we hungry, we salivating, turning nothing to something and celebrating. Markets changing, we calibrating. The first to get acclimated is the first to stack the payments, but you need to act with patience. But be careful waiting, cause this opportunity won't last forever before it is evaporated. So if you wanna flip some houses, hit me up to make a plan. Your flip deserves the upper hand.
Hey everybody, welcome back to another episode of Raised in a Flipping Bar. I'm your host, Derek Marlin, and we're recording this in December, which is insane. I can't believe it's already December. I can't believe the holidays are already upon us. Hopefully you guys had a great Thanksgiving, and 2026 is literally right around the corner. So what we're going to talk about today is goal setting for 2026. But what I want to do is I want to kind of set the stage with something that just happened this past weekend, and it really kind of helped put things in perspective of why we're doing all the specific work that we do. And for me, I actually got really lucky. I was at the Broncos and I almost said Redskins, sorry, Washington Commanders. I'm old school. I can't believe I have to say Washington Commanders. But I was at that game. And the cool thing is, one, it was an insane game. Probably this season alone, sorry, I'm digressing, but has probably been 3 of the best 10 games I've seen in my entire life. And I went to my first Broncos game in 1986. So that shows you how old I am, but yeah, it's just crazy. But anyways, the reason I'm kind of, framing this part of the story is I'm one of 4 boys. I'm the oldest, and my dad and I, we've always had season tickets to the Broncos. I actually got them in 1986 as a part of when my family actually bought their family home, which is another podcast episode. Obviously, you guys know I used to work there, so I have a deep affinity for the team. But in looking at what would really galvanize and get my brothers together, we are all very different. We're all spread across the entire country. I've got one in Austin, Texas, one in Hattiesburg, Mississippi, one in Vancouver, British Columbia, and my folks split time between North Carolina, and now they've got a place that they're building in Maine. So like literally we're obviously all over the place. And so I thought, what would get us all together? We're all very different politically. We're all very different in our outlook on, just all aspects of life, which is super healthy. But I was like, we all still love the Broncos. And so we started this 9 years ago, and we call it the Marlin Man Trip. And we go see a Broncos game in a different city every single year. And our goal bucket list is to hit every NFL city. I'm super lucky because I work for the team. So I've hit about half of the stadiums. But this cool, personal thing that I'm doing with my family, we've hit 9 different stadiums. So our first one was in New Orleans. That was awesome. We've been to Houston. We've been to Vegas. Man, the Broncos got smoked in Philly. Philly fans really nice because the Broncos got their asses kicked. But again, we just went to DC, and it was this cool thing because it's like in setting your goals, you got to figure out your why, which we talk about with Simon Sinek, one of my favorite books, but it's all about building and sharing that legacy. And it's a really, really cool thing. It's something that my dad's wanted to do, and got to give, my family amazing props that we realized on this trip. It was hard to travel over Thanksgiving weekend. Up until 2 weeks ago, there was a government shutdown. So there were all these things, but it was a really cool moment when we were jammed in the back of an Uber, and I am by far the smallest person. So I didn't, get lucky in the gene lottery pool. My brothers looked like they could play for the Broncos, and I look like the kicker. But it was a cool thing because we rented an Airbnb and had tons of time to spend together. Normally we'll do hotels, but it's like, what's really worth it? Spending a little more for an Airbnb and having this great kind of connection versus being kind of stuck in your hotel room. And my dad was super generous. He got all of us tickets, and he got really good seats. And so that's another thing, like pick strategically why you're working so hard and what do you spend your money on. And I think that will help reframe why you're trying to achieve your goals. So just as we kind of get this episode underway, it's not about just the financial gain. We're going to talk about setting goals in different areas, but it's all about kind of your why. And for us, that's kind of our why for our family is these cool Broncos trips. And it's something that we'll never forget, especially crazy overtime wins where who knows where the Broncos will go this season, but it was a pretty awesome thing to do. I think as we really get into the nitty gritty of this episode, I want to go back to one of my favorite mentors, probably not the right word, but people that I really admire. Person I've read a bunch of books of is Jocko Willink, and he's got a book called Extreme Ownership. And the thing that I love about that is he talks about executing your plan with a violent nature. Now, granted, this dude was a high-level operator, probably tier 1 for the Navy SEALs. And so I think his level of violent execution was probably different when he was in the service. But being a business consultant and working with business owners, I think 2026 It will not come from luck. Success will come from being very intentional, using data-driven goals for you to execute your plan. And again, kind of leaning on that Jocko thing, we're going to try to execute violently. So I think one of the things I want to touch on before we get into how are we setting our goals is why do goals fail? And why does that achievement hit major roadblocks? I think the first point is people are just setting up and just saying, giving generic information like, "Ooh, I want to do more deals." Well, what does more deals even mean? What does that even really look like? Is that one more? Is that 100 more? I think that's a big thing. The other thing is just having chaotic targets. So again, there's no alignment between your goals, your metrics of what you want your flips to be or your investment properties to be. How do you want to outline your hard money lending and what your capital stack is? What's your timeline for getting these deals done? So again, just being very, very chaotic and kind of working hard versus working smart, I think is another reason why a lot of people kind of fail and missing and not achieving their goals. I think the other big thing is kind of working off of hope versus just your daily inputs of like, I have to do these 10 things every day, and you stack and compound that and you can really start to see those results versus like, I'm working really hard or I hope this will happen. And I think that's a recipe for kind of a rough and rocky road in 2026. And I think the other thing is that we're going to continue from the data that we're seeing, from what's going on with the economy, with what's going on with job loss, is it's still going to be a hard 2026. I mean, I hope we turn this great magical corner that some people seem to be talking about, but I don't see it honestly. At Elevation, we're preparing for harder for longer and higher for longer, and that's more from an interest rate perspective. We're recording this before the Fed meets and hopefully does cut rates in December. But it just takes time for all of this to play out. I really feel like 27 will probably be that year where things get healthy and very active again. But I think you got to really set your expectations properly and figure out how are you going to achieve these goals and be careful of the things that derail you. I think as we transition from, okay, what's going to kind of get in our way and what are those roadblocks to how do we set specific goals? I think the big thing is don't set your goals around hustle and trying hard and working hard. Everybody does that. And that's an important piece of the puzzle, but it's like, what can you get high ROI and high leverage out of? And honestly, I'm pausing on this because you guys watching me online, I probably look tired. Sadly, it's because I am, but I had to get like a lot of shit done yesterday. No, 2 days ago. And I ended up just apologizing to my family. And I was like, I got to work late. I got to get stuff off the books. Again, good problem to have. I was out of the office on Monday because of this awesome Broncos trip. So I just felt behind. I pounded a cup of coffee at 3:30. And then I felt like I hit my Jerry Maguire mission statement, or that awesome movie with Bradley Cooper, Limitless. If you guys haven't seen it, it's great. It's like I took my NZT and I just worked for like 6 straight hours. And I worked till about 11 o'clock last night. But is that working hard or is it working smart? Like, I know in reflective kind of thought process, I'm way better in the morning. So like, okay, let's be super smart and strategic. So what I'm going to do starting next week is when I got to put in my 1 or 2 really hard days in the week, and long days, I should say, is like get to bed early for me, and wake up at 3:30 or wake up at 4 o'clock in the morning. I can crank out more during that time, which is also even less interrupted than, let's say, 5 p.m. to 11 p.m. like I did. So it's like taking that self audit and doing that on a daily basis. So again, I'm no, we don't have perfect answers. I'm, doing it to myself sometimes, but just want to let you guys know kind of that good example of like working hard versus working really smart. And you can kind of marry those two. So as we come into, I'm going to kind of set the stage for a 4-part framework for 2026. And how can you set elite level goals for you to get elite level results? And I think the first thing is you got to build really big discipline around your buy box and around your investment guidelines. And the reason is there's so many deals coming in from so many different places. You have to know exactly what is your buy price and what's your maximum sales price or your ARV. You got to know what is your return on investment, whether that's ROI or cash on cash return. And then what's your timeline? How big of a project do you want to take on? So if you can check those 3 boxes of ARV, buying and selling, those price ranges, the ROI, the cash on cash return if you're borrowing money from a hard money lender, and then your turn time and your speed on processes, on projects, I should say, I think that's going to help you a hell of a lot more than just being like, again, I got to do more deals or I got to make more money. Use those as your decision-making tool to say no. It's okay to say no. We say no. You should as well. That's going to free up not only your capital, but your mental bandwidth to get the right type of deals done. So set your metrics. Absolutely number one. The second thing is creating the right capital stack for 2026. And this is actually kind of a good thing that I'm excited to report. We deal with a lot of different hard money lenders, and have kind of our go-to two folks that we typically use. And rates are coming down. I do need to give a shout out to our friends at Backflip. Man, we just got qualified because of kind of our volume and level of experience to borrow at 7.5% and half a point. Like that's private money. That's not even hard money anymore. And it's because they've done a great job, gone out and raised capital and are able to kind of pass that savings along. So again, sliding scale, if you're a brand new investor, maybe you're going from paying 12% interest in 2 points, and maybe Backflip can hook you up at 10% in 1 point or something along those lines. So I think that's number one thing is get your capital stack and your capital strategy ready. The other thing is have a couple different options. We've got another hard money lending partner that we've worked with, Indicate Capital. We just had Jesse, one of their co-founders, on a couple episodes ago, and they've got a great product where it's a higher interest rate, but it's no points, essentially no fees. And so for your smaller projects, your quicker projects, that works really well. So like have a couple different options because that's going to save you several $1,000s or maybe for a 6 to 9 month project, low tens of thousands of dollars, and that goes right back in your pocket. So capital stack and capital formation, super, super important. I think the third pillar of our framework of how to, crush it in 2026 and setting really great goals is the systems behind the type of business you're running, whether it's a flipping business, a wholesaling business, a real estate investment brokerage business, is creating the systems and then having your team around you. And whether that's obviously internal team, like at Elevation, we've got in-house project management, we've got in-house design, we've got great agents to help find properties and sell properties and acquisitions folks. But just make sure that you've got those systems set up and make sure you're not in the weeds all the time. I think a big thing for us, we're just onboarding 2 new rock stars on the acquisition side. And as I get them trained up, it's thinking about teaching people to underwrite properly so that you're not having to look at deals that probably don't make a lot of sense. So it's just being, again, kind of in the business versus on the business. I think lead follow-up is going to be super, super important. So have your KPIs and your system set up around lead follow-up. I think at a minimum, just kind of side note and flip tip, you got to hit your leads at least 7 times. We've got a 7-point plan of how we would follow up with our leads. So we'll hit you guys on a new episode with that here shortly, but that's going to be important. And then also accountability from our general contractors. So as Travis is running these projects, we've got to make sure and keep everybody accountable, keep that system in place, and don't, kind of fall off the wagon there in particular. And I think that the big thing about setting the right goals and achieving what you want in 2026 is creating a scorecard. So you have to, what do they say? What doesn't get measured doesn't get met. You have to track everything. It's super, super important. So if you go back probably 2 or 3 months, we had an Elevation Business Book Club episode, and I reviewed Sahil Bloom's The 5 Types of Wealth, which is, again, amazing book. And so what I would really advise is not only are you setting up your metrics and seeing what are you doing on a daily basis, a weekly basis, a monthly basis, and so on, but hit those 5 different pillars. And something that I got, shout out to my buddy Nathan, who's in one of our masterminds. What he does, and I totally am stealing this from him, is he sets aside a couple of hours on whatever day is your birthday every single month to check in on these 5 things. So for me, my birthday's coming up on December 19th. So I've picked the 19th as my date every single month. I put it in the calendar and I set aside 2 hours to rate myself and my businesses on a scale of 1 to 10 of how am I doing in these 5 buckets. So again, remember back, it's the time wealth. Do you have time to actually execute your business or take off once in a while and do what you're doing? How's your physical wealth? That's obviously super, super important. Like you can push things so hard, but only for so long. I kind of group these together, but the mental and emotional wealth, that's obviously really, really important. And then it's not going to be, ones or tens the exact same time, you're going to ebb and flow and track it and go back and look. And then the other one is social wealth. What are you doing with friends? What are you doing with family? What are you doing with community? And seeing how wealthy you feel and how overall good you're doing in that bucket. And then the fifth one is financial. And I really do think that's telling. Again, I'm kind of recapping that business book club episode. Rate yourself on a scale of 1 to 10, hit those 5 different buckets, and then go back and see, like, why were you down 1 month or why were you up 1 month in a certain area? And then either rinse and repeat that or maybe cut something out. So those 4 pillars, again, kind of set the framework, whether it's making sure you've got all your numbers dialed in bucket number 1. So you're going after the right stuff and turning down the wrong stuff. It's stacking your capital appropriately and getting your financing dialed for this year. And like I said, there's some good deals out there. Setting up your systems and your team and still evolving those even on the fly. You can still improve every single week on your systems and what your team is doing. And then kind of hit that 5-pillar wealth scorecard. I think that's super, super important. So as we approach this next segment, I want to kind of give full disclosure. And I think this is honestly a smart way to use AI. And I was having a hard time with this section of like really crystallizing what I wanted to talk about. And so it's based on the philosophy of more, better, new. And that's a business strategy that we've really been leaning into this past year. And we're going to continue to accelerate that in 2026. So I 100% ran this through ChatGPT, and I had a couple different iterations. And I think it kind of kicked out a really cool way to look at it. So first I'm going to give you the framework of more, better, new. And then I'm going to hit you with this last little kind of nugget that I grabbed from ChatGPT. And I thought it was a cool way to do it. So the first thing is more. What is working right now in every aspect of your business, no matter how big or small you are right now? And how much more can you do of that? Meaning, how many more offers can you write in one day? How many more real estate agents can you talk to for pocket listings or off market deals? How many more flips can you potentially do, or more wholesales or more brokerage transactions to get to a 7-figure either business or even revenue stream within a certain point of your business? I think a lot of us, and myself included, honestly, kind of jump to the new thing, which we'll talk about here in a second, when you could just do so much more of the thing that's working. Obviously, if there's something you do a ton of and it doesn't work, let's cut that out and just dial into what can we do more of. Once you feel like you've maxed that out and you're getting that into a 7-figure income stream, or for those of you guys that are kicking ass, 8-figure income stream for, again, the business or that vertical, if you will, then you go to better. And that is where, how can you get the thing that you've maxed out on your more done in better fashion, more efficiently, more accountability, faster turns? How can we get our properties prepared and listed properly? How can we get better at buying at a little deeper discount, obviously selling at a little better price point on the back end? How can we get better with our relationships with our contractors? How can we get better with maybe even it's just the transaction management process for everybody that's involved in a specific deal? So again, how do you get better? And that's optimizing your systems. Again, I kind of think more is working more in the business and the better is probably working on your business. And then it could not only be yourself as a leader, it could be everybody in your individual divisions or roles within your company. Then once you've maximized that, there's still definitely some revenue to be put behind that. You can hopefully increase your revenue going from more to better. Then you finally wait for the new. And the new, and I'm so guilty of this. You guys have heard me say it before in the podcast, but I've got a business consultant, shout out to Doug at the CPA Coach. But like being a visionary and having big ideas, that doesn't mean that we should always execute on those ideas. And a lot of time it takes our eyes off the prize. It costs a lot of money. Yeah, there's huge upside, but I've gotten finally, I think, pretty good at only considering something that's new in a specific, very, very parallel aspect of the business. And this is something that I got from Jake Jabs of American Furniture Warehouse. Is he is so, they call it vertical integration, meaning from top to bottom, all the different aspects of your business all feed off of one another. I'm not going to completely change course and be like, ooh, I want to get into the build to rent business, where we're buying new land, we're developing new properties and using them as rentals. Like, yes, that's real estate investing, but that's so far away from what I'm doing. And so for me and for Elevation, I should say, our little new is how can we kind of grow and expand our consulting division and our education division? So it's stuff we're already doing. It's stuff that we've done at a high level, but how can we get a little bit better? Whether it's opening up ourselves up, which we have now for more consulting engagements with clients, doing joint ventures with clients to get more strategic volume going. And then we're also going to launch a product. It's going to be on the school platform. So we're going to have an elevation real estate investing school. So yes, that is a new piece of the puzzle, and it's going to kick in early 2026. We're shooting for January, so stay tuned. But it's not completely a total one-off, in a completely different area. Or in the past, I've been guilty of this. It would be flipping in a different market. Like there was a time when I met a business colleague and I was going to flip houses in Las Vegas. It took 9 months of my life. I went to Vegas 5 times. You guys know me. I overthink things. I did tons of research, spent money, and realized, no, this really wasn't the fit. I should have just stayed in my lane. And so the cool chat GPT kind of evolution on this was that if we, use our 100% capacity, 60% of our capacity should be on doing more, really hitting those goals, getting more, like that's juice is worth the squeeze. Like how much can we squeeze out of each individual aspect of our business and do more? Great example for us is cold calling. Instead of me doing a completely different marketing channel, like getting on TV or something, I'm just doing more cold calling. And that should really help cascade into doing more deals. Then if we focus 30% of our energy and efforts and resources really on getting better, I think that's a really great kind of middle pocket right there, because you spend most of your time doing more of the thing, as Alex Hormozy says. Then we get better. Then that obviously leaves 10% for the new. I think if you do that, I think that's really going to help you set yourself up for success. And you guys check back with me at the end of the year so that when we set our goals here, where we're doing team meetings actually next week, is like, did I stick to it myself? So more, better, new, 60%, 30%, 10%. As we hit our last 2 segments on this episode, I really want to tee you guys up for success and kind of showing you where some opportunity might lie, not only the way that we're looking at it, but hopefully to spur some thoughts and ideas for you of how can you grow your business. Again, in this, I think harder for longer and higher for longer interest rate environment. One of the things that we're really getting back to basics on is we are targeting our overall elevation buy box. In a perfect world, are properties that have an ARV between $700,000 and $900,000. So not to say I won't take down a deal with a $500,000 ARV or a $600,000 ARV, but we learned from last year that I tried to hit a lot of singles, and some of them were a strikeout. We lost money on 2 deals in the last 6 months because they were what I thought cheap, fast, simple ones, and they ended up being a little longer than we thought. We still got beat up in inspection. They really weren't that profitable. I'm still a little hesitant from a capital perspective. I don't want to tie up as much capital to do those flips where we've wholesaled them to our clients, and the majority of those clients have done really well, is, the luxury flip. So the 1.2 million to 2.5 million kind of entry level luxury. We're not focusing that on that ourselves, I should say. We are sticking to just above median home price because I think those are the people that have been cooped up for a while. It's the move up buyer. It's the little bit more affluent first time home buyer. So those houses I think are going to be really, really opportunistic. And that's an area where we're going to focus. We're going to live kind of again on the outsides of the pricing spectrum. And what I mean by that is we're doing a ton more off market acquisitions this year. And really as we speak, heading into 2026. So I see a lot of opportunity for picking up a property and just literally cleaning it up and then relisting it at a super low price point. So most people call that wholetailing. So not wholesaling. Wholesaling is obviously when you've got the property, you put under contract, you assign it, and you sell it off to another investor. Wholetailing is where you actually take the property down yourself as an investor. But think of, a week's worth of work, some cleanup, maybe some carpet and paint, or fix broken windows or fix the issues. But then you're going on the market on the MLS and selling that as is beat or home, because we are still getting beat out a lot by other investors where we are making offers for properties that need to be flipped. They're listed on the MLS and they're still getting multiple offers. So it's like, do that and do that wholesale and do that quick flip. We're then again jumping to a little bit higher end on the pricing spectrum. So we're going above median home price. We're buying properties. We're completely fixing them up. And then we're selling them between 700 and 900. I think that the challenging bucket, I guess is the right word, is the middle. if you will. So if I'm thinking of a scale of 1 to 10, 1 is an absolute disaster, needs everything, probably has structural problems. It's just the worst house there is. And 10 is just a beautiful finished product, beautiful end flip. And this could be at any price point too. So I don't want to get price point specific, but I think if you're acquiring and doing wholesaling and simple stuff and buying the properties that are the, 1, 2, 3, or 4s and immediately listing them, I think you're going to do really well there. Um, and then you've got to make your flips that, ideally that 10 out of 10 or 9 out of 10. I think the challenging thing is getting stuck in the middle. So, buying something and only doing a kitchen, or buying something and $30,000 cosmetic remodel, but then your product is maybe a 5, 6, 7, or 8. But the problem that we saw this year, and I think we'll continue to see it next year, is there's tons of competition. There's tons of kind of average homeowner properties. And so you have more competition that you are listing against. You also still have, again, higher interest rates for longer. So it's still harder for people to qualify for those loans. I think you're going to get beat up on inspection. And then I think the other thing is, again, let's say that you do a kitchen, which is great on the rehab side. But if all the bathrooms need to still be remodeled and are super dated, and the paint colors are ugly on the outside, like most homeowners don't have that $30,000 to $50,000 to just put in the house or do things on their own. And then they're also getting retail contractor bids. So I think that's going to be the dangerous part. So those are opportunities that we're really looking at from an investment perspective. I want to kind of talk to our agents and our realtors and real estate professionals. I think obviously catering to investors like us is going to be super, super important. And I know this seems probably old school, but a takeaway is put yourself in my shoes. If you're an agent, we all need to be good salespeople, but don't overlook the obvious. And I'll give, an example is I just got a deal sent to me yesterday from another agent, and he's a sharp agent. He's been doing business for like 20 years, but he sent me this deal that was more of originally came to me as a development play. And I quickly said, again, no, thanks. That's not our area of focus. I ran it by one of my buddies who is a developer, and he's like, no, here's the things that don't make this a good deal. So I just politely said, thanks, but no thanks. And I said, hey, just as a reminder, we're only doing kind of as is flips. Again, property redevelopment. We're not doing scrapes. We're not doing new builds or whatever. Then he says, oh yeah, well, no, this could actually work. It's in dated condition. So the ARV is 1.2 million. And then I got on Google Earth, and this property has 2 monster strikes against it. One is it's adjacent to a really tall apartment complex, probably like 15 stories. So you have people in the apartment complex that are staring in your backyard. Huge strike, number one. The other strike is that it then backs to a major, major road. Again, people paying 1.2 million, I don't care what part of town it is. When you have those 2 strikes against you, nobody's buying that damn house. I don't care how cheap you get that house for the most part. So it's just, again, put yourself in my shoes. And sometimes I channel my inner dad, who was a pretty phenomenal Wall Street trader. And I almost want to say, like, well, if it's so good, why don't you buy it? So again, I'm not trying to be an asshole here, but like, just put yourself in our shoes and just be really smart, and just be empathetic and be understanding and just be valuable. And I think agents will do a great job, and then you'll get listings on the back end, and we'll all do more business together. So I think that's super, super important. As we kind of wrap up the episode, I want to give you guys kind of an action plan. And this is where I'd love to hear from you guys. Because again, everybody sets goals in different ways, but it's like, how do we attack these goals? Again, Jocko, aggressively and violently attack these goals, and how do we move forward? So what I would love for you guys to do is get me your 3 financial targets. What's your cash on cash return that you want? What's your ROI and your profit per flip? I think those are going to be super important. How can you lower your construction costs? Try to get those in the 5 to 7% lower range. And that's obviously going to increase your margins. And then what's your net business revenue goals versus the number of deals? Don't just be a deal junkie. That usually doesn't end up going very well. Instead of doing 20 flips and they're all over the board from a profitability standpoint, how could you maybe do 10 to 12 flips, but do them hyper profitably? And then you could actually have some time to check those other 5 pillar of wealth boxes, and probably be more fulfilled. So I think that's, bucket number 1, get me your 3 financial targets. Bucket number 2 for your homework is identify your version of more, better, new. And what I would say is give me 3 focus areas in the more and the better categories. And then let's only do one potential focus area in the new, and really stress test that and think about that and review that on a quarterly basis. So again, kind of that mindset shift on the more, better, new. And I think the other thing is just, again, create rules around things that you're going to say no to. I think that's going to keep you on track. It's going to get you out of shiny object and really hit your metrics. So what are you going to say no to? And really the last bucket from your homework and from your scorecard is you've got to track your outreach on a weekly basis. So maybe it's numbers of deals analyzed, number of investors, agents, or wholesalers that you're going to call, number of offers that you're obviously going to write. I think that's super, super important. And, maybe again, it's the number of hard money lenders and private lenders that you're going to contact or private capital you're going to raise. So you got to track that on a weekly basis and then against your results. So if you're not seeing the results that you want, we got to turn the dial and we got to do more in a very smart, strategic manner and maybe get better. Pause on the new for the most part, but get me those 4 different things. So hopefully you guys have gained some value out of today's episode. It'll be dropping in December, so it should be perfect timing for 2026. So again, please text us or email us or DM us your goals. I would love to know what you're doing. For those of you guys out there doing vision boards, I'd love to see a picture of your vision board and see what you guys have going on. And again, message me your 5-pillar wealth goals. I'd love to know exactly what you guys have going on there. We're going to pause on our events for December. Everybody's got so much going on with the holidays. You don't need another Christmas party or whatever. But I hope you have a great holiday season. I hope you guys have a super, super happy new year. And we will catch you guys on the flip side.
Elevation, elevation. Flip that house, man, this money for the making. We gon' get it, hustle harder, everyday fame.